Hi, this is a review of round 1 for the simulation for MBA 512. Now, you can see here in round 1, I'm looking over the charts for the class, and the first one is net profits. And net profit chart is first because that's really the most important thing to many shareholders and owners. So you can see here we have a nice, a lot of teams made close to $50,000 in net profits. So this would be the team. Sammy's Autos has $58 million in net profits, followed by number second. It might be Auto Garage, or is it 51? No, 52, 53. 53 Leopard Motors would be coming in second. So, and then down here we have two teams with 11 and $7 million in net profits. So that is pretty low compared to the competition. Remember, when your overview points that you're earning are basically analysts looking at your company and sizing up your performance from last year to this year. So the companies who perform better typically have higher overview points, the teams who have higher net profits. Now, these teams might have lower net profits because maybe they were going for a higher volume, lower price strategy. And generally, when you do a high volume, lower price strategy, you have to have a higher enough volume to make up for the loss in profits by lowering your prices compared to the high end of the market. So it's a tricky thing to do in business. It's a tricky thing to do in this game as well. Okay, so if we move on, here are the points per team. So every team but one has made points. So this team actually lost 100 points, and that is, again, must be due to a high volume strategy that didn't have enough of a high volume to make up for the lower price. Okay, but everybody else, we had the Sammy's Autos had 110 points of totally earned for round 1. You can see they're the ones with the highest net profits, so it makes sense to me that they have the highest overview points as well. And of course, we have a few teams here in the 900 level, like at least 5 teams. So that's very good. Remember, you want to get for the simulation cumulative points, because each round you'll earn points and it gets accumulated. You want to earn a total of 2,500 points. So I guess it's about a minimum of 425 points on average every round to get the full score for this. And by the way, round 2 is due on June 8th. Okay, back to charts. So here's the 400 mark, and we see that almost all teams, but about 5, have made more than 400 points, or made the average amount of points that they should be making each round to get the A, or the 15 points in this project. Okay, so if you look at stock price, we see that Sammy's Autos has the highest stock price, because what's a big factor of stock price? Net profits, so earnings per share. So if you follow stocks at all and you see that a company's earnings per share have increased, then their stock always goes up. So two things that greatly help to increase stock price: increase in revenues and increase in profits, with increase in profits being the most influential on stock price. But there's also the amount of outstanding shares. So companies who bought back stock in round 1 would have small amount of outstanding shares, which would have helped increase their per share statistics. Okay, and then we have a couple companies at the bottom here where their stock price has gone up, but not as much as the majority of the class. So no one's stock price has gone down, which is good, but some people have increased the stock price much faster than other teams. Okay, and we look at sales. Now here we have Leopard Motors, Kyle's Crazy Autos, Speedy Brook, These are all the top companies in sales. Now, these are sales dollars. So even though I know a couple teams were trying to compete on larger volumes, but companies with higher prices, and sometimes they might have lower volumes with higher prices, will still have the most amount of sales dollars per team. Okay, so here this company here had a very high amount of sales. They're in the top the top side of the top 50% of the class in sales, but even though they actually sold the most units, they didn't have the highest sales because the prices per car was much lower than most teams. Okay, so earnings per share, Sammy's Autos had the highest earnings per share. So you see here, there's an increase in earnings per share for these companies and a decrease for these two companies. So these two companies, since their earnings per share decreased, that is very shocking and upsetting to investors. If you see any of the stock releases, when they release their earnings, if their earnings per share go down, their stock price goes down tremendously. So we want the earnings per share to go up, and Sammy's Autos did that because they had a combination of some really great results and in their net profits to help to increase their earnings significantly. And we have Ross Stone Auto, Nigma. It's hard to see all these companies. Speedy Broke. So a lot of the companies who had the highest amount of earnings also had the highest earnings per share. It makes sense. Okay. So if we look at the total market sold, we said a lot of, you can kind of go in here, and so we have anywhere from 8,000 cars. And a lot of people in here we have a 6,000. So this company was under forecasting, and some companies were. This is just units though. Okay, so here we have, this is the company I said that has, this company sold the most units at 9,100 units, 3.15% of the market share, and most of the companies were in the 2% area of the market share. So they had the most, this is why I find it interesting. I was looking at that company, they had the most sales in units, which is, I guess they're going for a high volume, low cost, high volume provider, which is a decent strategy, but it's difficult in the first round because you disappoint investors not so much in your sales. So I think your sales units sold helped to maintain the stock price, but your overall profits were much lower because you're selling the car at a much lower price, which is what gave people a motivation to buy it. However, you can see that strategy isn't always the best unless you can really greatly improve your sales volumes. You may have priced the cars too low. All right, so that's just an overview of the results here. I'm going to go into the simulation. I'm going to run a couple rounds to kind of give you an idea of what I would do. So let me go into, and I can run a demo. So let's see. So I'm going to reset my demo game, and this is like your practice game. So I encourage you to go in here to practice. As much as possible. So I'm going to go in here, and so this importance factor shows this is very important. So maybe I'll increase that, and then I'll put my price on the car, and I'm at 41%. Now everyone starts out at a gross profit of 40%. So I want to make sure that my car is above that, because it's very important that every round I should be increasing my overall profit margins, because that's what customers expect. They expect to see profit margins continually increasing. All right. So as I'm developing the vehicle, of course I want to make the best car possible. However, if I don't increase my profit margin, that's not going to be possible to please investors as well. Okay. And the forecasting, most teams did pretty well on the forecasting. Okay. So most teams did pretty well in the forecasting, and the key to doing well in the forecasting is reading the student user guide. It gives you a pretty good overview of how to forecast properly. So I'm just making my cars here. So, and I'm tweaking them a little bit. To see how I can make them a little bit more, just tweaking a little bit. Okay, so this is my input in my sales, and I made sure that all my profit margins were greater than 40%. So in the marketing area, again, the student user guide does a good job of explaining this, but they have a nice range here of how to enter in the low end, the high end of the forecasts. So I think I have a pretty attractive car, but my prices are kind of high. So I might advertise more towards the high end than the low end because I have high advertisements. So it's going to take a while for me to set this up. So I'm going to pause the video and then come back and move into production, because I have to really break this up based on the marketing strategies of the user guide. It takes a little time. Okay, in production here, and no one really seemed to have a problem with this. I'm going to just buy the plants I need, not more, not less, and I'm going to make the vehicles, just like you did. Okay, and I'm going to invest in my operational investments. That's important to keeping the company, keeping my costs down in future rounds by making these investments today. This is basically my research development, new software, robotics, equipment, new equipment, maintaining and improving the efficiency of my manufacturing. So this is a really critical area to maintain. So I'm going to, maybe I'll do just a little bit more in here. Okay, I'm going to submit my production. So now here I'm going to go and see I have a deficit of 18 million, which really is not that great. So I'm going to borrow. I don't want to borrow that much money, but I guess I will, because I want to, let's see here, 9 million. So I'll do 15. Do some stock. Okay, so now I have a positive cash surplus, and that's important because if you have having a cash, no one likes a company that runs a deficit. So if it seems that your company's mismanaged, if you're running a deficit, so you want to always have a cash surplus. I like to keep, this is even low for me, I usually like to keep 10, maybe $15 million in here as a surplus, just in case I don't sell every car I forecasted. So if I have an leftover inventory and I don't sell every car that I forecasted, I'll wind up with a deficit and lose 100 points. Okay, so let me finish round one. Okay, so I get my results back from round one, and I made 800 points, which is on par with some of the best players in our class, I didn't have the highest score overall based on the team competition, but we see here that the quick ratio, because I borrowed money, my quick ratio went down, but my sales increased. My sales increased by 55%, so I earned 55 points. My debt ratio, my quick ratio went down, I guess because I have more current assets. I'm sorry, I have more current liabilities than current assets in the previous round, so that I lost some points there. And then my profit margins, I was able to increase my profit margin to 48%. So I earned 19 points there, a 19% increase. And my operational profit margin increased. and my net profit margin increased. And you should be able to understand all of these financial ratios from financial accounting, from the finance class you've taken. So this MBA 512 is a capstone class, should be taken towards the end of your degree. So in the beginning part of your degree, there are many classes more than one class that should have went over financial ratios. So I'm expecting you to understand that. Total asset turnover. I had a reduced total asset turnover because I purchased a lot of assets. My equity multiplier increased. My return on equity increased. My earnings per share increased. My return on assets increased. My market capitalization increased. Now here's the thing. If you go above 100%, they limit you to only earning 100 points. So I could have earned 200 points here, but they limit it to 100 points in any category. And that's to prevent people who have a great round and then purposely do bad, and then so they can have another great round from, I guess, gaming the system on here. Okay, so book value, I increased my book value, and I increased my forecast. So I forecast most everything at close to 100% level, so I earned points there. I had made some operational investments. Now, operational investments are if you make operational investments. I made more than 100% here, so I got 100 points. So every round you want to continue to make operational investments to get these points. And I had a surplus, so that's how I got my 800 points. And now I'm in round 2 like everybody else. So the first thing you should do in round 2 is check your individual assessment. So my revenue was low compared to past players. So it gives me some hints on what I can do to increase that. So my stock price was low or average, and this is what I could do to increase that. Buy back stock. Okay, so here, go in here and look at your self-assessment to see how you should improve your game. So once you review that, you can review your individual charts, and you should always go into your performance chart, and at the very bottom you want to look at this market potential versus actual sales. And I see here that my potential was 2,091, but I only sold 2,000. Here was 2,600, I only sold 2,500. I met all the demand here, and luxury I could have sold 17, I only had 16. So this is just a quick little review of what my demand was versus my forecast. Here I'm happy with this because I didn't want to buy an extra plant just to sell 91 cars. So I'm willing to give up 91 cars because I didn't want to buy another production plant and have to finance $10 million just to build 91 cars. So imagine that. Imagine building a whole factory for a whole year and all that factory produces is 91 cars. It's not worth it. So sometimes coming in a little bit below my market potential in blue is okay. But here my market potential was 2,600 and I only made 2,500 cars. I had the capacity to make another 100 cars because I had purchased 2 plants. So this was sort of a fail here. But it's not too far off. So just keep an eye on that. And when I'm going to forecast, I'm going to look to these market potentials as my guideline for next year's forecast. Okay. So if I go in and then if I look at my industry charts, I get an idea of what other players have done and how they scored and how they built their cars, my financials, and I start over in sales. And I've noticed that the customer expectations have increased because that's what customers do. Every year they increase their expectations. They now want backup cameras and they want blind spot protection in their rear view mirrors, and they want navigation systems. So they want better fuel economy and more engine power. So this is how it is in the oil world, and for a lot of products. Like every year when there's a new iPhone, you expect the new iPhone to have more features. You have higher expectations for it. And the price goes up slightly as well, the price range. Now, so I'm going to redesign the cars. And you see here that I have a operational cost reduction, $1,200. That's from my investments that I made last round. All right, so I'm going to reforecast this. Okay, so and again and I'm not really doing too much research here. I'm just kind of putting some numbers in to move fast through here. And I see that is that 300, 3,000, and I see that my profit margin, if I go to overview, my overall profit margin was 48% for gross. So in my sales, I need to get closer to that 48%. So I'm going to make some adjustments to get above that 48% of my gross margin, because that's what shareholders who buy the stock are expecting. So if I can increase my profit margins on each of the cars, I can then guarantee that I'll have an overall higher profit margin next round. Okay. So my So with the sales price, the sales price of the importance factor is 5%. So the sales price in the luxury, people actually expect and are okay with higher costs in the luxury cars. And that's, I'm assuming, because that's part of what tells you that your car is a luxury car, is the cost of it. So buyers of luxury cars are okay with higher prices, where you could see that on the economy vehicle, the price is a very important factor, and the lower price of the vehicle will help determine how many cars you sell. Okay, so I did the sales, and again, I'm going to go into marketing. I'm going to pause it while I set up the marketing. I'm not going to necessarily show you my marketing strategy, but since I am making cars with higher prices, I'm going to advertise a little bit more in the high end of the range. Okay, so in this production, I'm going to need some new plants here. Actually, just one new plant. So, and I wouldn't copy my, and here's where I had some cars that didn't sell. I wouldn't exactly copy my strategy or forecasting here, because I am just doing this real quick just to run through round 2. But I am going to continue to buy more operational investments. I'm going to going to go from 8 to 16 million, ensuring I'm going to get that 100 points. So let me process that. Okay, now on the finance page, I see I have a surplus. I'm just going to go ahead and listen to the assessment tab told me I should buy back some stock. So I'm going to buy back some stock. And I still, this is not buying it back. I'm actually selling stock. I want to do retire funds. So let me, all right, so now I'm getting an error here. A limit. I have a limit of how much I can buy back. Okay. Still, all right, so let's see. All right. Yeah, so there are limits to how much I can borrow or how much I can buy back. So let me retire some. It's a little bit of debt. Okay, so I still have a decent surplus, so I'm going to advance the round and see how I did. So now I'm in, so in round 2 I did 500 points, and I was able to increase my revenues, and increase my gross profits, my operational and my net profits, and many, so, okay, so 558 points isn't so bad. So there's just an example of, when you're going from round 1 to round 2, you want to focus on your profit margins, and you really want to look at your assessment tab to give an idea of what you can be doing to improve your numbers. Okay, so that is my quick review of round 1, and we see that many teams, actually this one team had 1,100 points, which is astonishing for the first round. It's really good. Now, since you're competing year over year with your own financial statistics, it's going to be quite interesting to see how people do in round 2 of the simulation, because it does get harder in round 2 and 3, at particularly hard rounds as you're building your company. So I wish you the best of luck, and I'm going to finish this recording here and send it out to you as soon as possible. Thank you.